What is a tax rate comparison? Have you ever wondered how different countries tax their citizens? A tax rate comparison looks closely at the levels and structures of taxation across various economic systems. It helps us understand how much tax is charged on income, consumption, property, and corporate profits. These rates can vary widely based on the economic model or policy goals of each country. In socialist systems, tax rate comparisons are especially important. Here, taxation is viewed as more than just a way to gather government funds. It serves as a tool for redistributing wealth and funding public services aimed at promoting social equality. Socialism often advocates for higher tax rates on wealthier individuals and corporations. This approach aims to lessen economic disparities and finance social programs that benefit everyone. When we look at tax rates, we consider several key aspects. First, we compare different types of taxes. These include income taxes, wealth taxes, sales taxes, and corporate taxes. In socialist economies, turnover taxes may be structured differently. They might reflect fixed margins between producer and consumer prices rather than traditional market-based taxes. Next, we examine tax rate levels. Socialist tax systems typically impose higher rates on wealthy individuals and capital owners. This aligns with the belief that those with more economic power should contribute more to society. In contrast, many capitalist systems favor lower tax rates to encourage investment and economic growth. Another important factor is the structure and progressivity of taxes. Socialism supports progressive taxation, meaning tax rates increase as income rises. This aims to reduce income inequality. Comparisons often highlight how progressive or regressive a tax system is, showing the different impacts on various income groups. The purpose and use of tax revenue also differ between systems. In capitalist economies, taxes mainly fund government operations. In socialist systems, tax revenue supports collective ownership, social welfare, and public services. This approach is central to financing the redistribution of resources and expanding state functions. Tax administration can also vary. In some socialist economies, tax rates and structures may change frequently due to price controls and state planning. This can complicate comparisons but also reveals different economic management strategies. Practical applications of tax rate comparisons in socialism include evaluating how tax policies affect income equality and social welfare. They also help assess the feasibility of tax reforms that increase revenue for public services without burdening the working class. Understanding the balance between taxation and economic incentives in socialist versus capitalist economies is essential. In essence, a tax rate comparison looks at how different systems impose taxes and the impact of those taxes on society. Socialism advocates for higher, more progressive taxes to fund social programs and reduce inequality, while capitalist systems often prioritize lower taxes and market-driven incentives. These comparisons clarify how taxation aligns with broader economic and social goals across different economic models.